It's time to turn her out of business. For that, who better than Kate Moody to join us? Good to see you.
Hi, Mark.
Starting with the markets, a roller coaster day for investors around the world. Kate, explain what's happening.
Well, it's hard to explain, really, but we'll do our best.
We trust you.
We saw a lot of surprises on Tuesday trading, Wall Street in particular, rallying before the closing bell, crossing into the green after a day of mostly negative trading, and then losing steam just at the end of the session. Let's take a look at the closing numbers. A pretty flat close, actually, on Wall Street, just slightly down in the red there. The drama was really all in the trading. The Dow Jones was the most volatile index, down nearly 150 points, swinging quite wildly before settling there, down just 0.08%. The energy sector was the worst performer of the day on Wall Street. European indices closed more sharply down after a sell-off in Asia that saw the Nikkei tumble nearly 5.5%. The CAC 40 here in Paris ended below the 4,000-point barrier for the first time since December 2014. The DAX and FTSE each off about 1% each. The Athens Stock Exchange back on slightly firmer ground after plummeting 8% on Monday. Now, one of the big weights on trading this week has been the banking sector. European banks lost about 4% on Tuesday. Deutsche Bank's chief executive has tried to assure staff and investors alike that the lender is, quote, absolutely rock solid. This says its shares recover from a nearly 10% loss on Monday. But broader concerns about the health of financial institutions around the world are still creating turbulence, as Fernand Van Tetz explains.
In free fall, markets dropped across the board as the global sell-off continued. Particularly hard hit, the banking sector.
The financial sector, banking system, is facing a huge problem today. The first one is the drop of the oil prices, because a lot of American banks and European banks are affected by that, because they lend money to countries or to companies which are exposed to that oil prices.
Already in decline since last summer, European bank stocks have dropped more than 20% since the start of this year. Part of the reason is low interest rates set by central banks. The policy is meant to encourage banks to lend more money instead of hoarding cash to keep the economy moving forward. But it also means lower interest rates on loans and therefore less profit for banks. Japan's central bank even introduced negative interest rates at the end of January. Analysts say bank stocks are unlikely to pick up anytime soon.
So for the time being, the financial sector will continue to be a drag. Of course, we have Janet Yellen's testimony later on this week, which we are mainly hoping will give some sort of direction to both the currency markets and to the equity markets. But for the most part, it does seem that investors out there feel that central banks have lost a lot of their teeth, and the impact that they once had is becoming less and less as the months wear on.
In her first public remarks since raising interest rates in December, the Federal Reserve Chairman could shed some light on whether banks face systematic problems and the risk of spillover into the broader economy.
Now, oil prices have been another major factor in the market turmoil. This Tuesday, prices came under heavy pressure once again. U.S. WTI crude settling just under $28 a barrel. You can see they're down nearly 6%. International Brent down a larger percentage, but just above $30 per barrel. Now, part of this is related to a warning from the International Energy Agency, which said it expects global demand to drop even further in 2016, that it doesn't anticipate a real recovery for the oil market anytime soon. Barack Obama has unveiled his eighth and final budget, a $4.1 trillion spending plan for the fiscal year that starts in October. The Republican-controlled Congress has already indicated it will block the proposal, which includes an increase in spending on the president's so-called legacy priorities, like climate change and health care. A controversial tax of $10.25 per barrel of oil is intended to be paid by energy companies. That would go towards transportation infrastructure. Obama also outlined $19 billion for cybersecurity to update federal technology and make it less vulnerable to attacks. Take a listen.
This is not an ideological issue. It doesn't matter whether there's a Democratic president or a Republican president. If you've got broken, old systems, computers, mainframes, software that doesn't work anymore, then you can keep on putting a bunch of patch on it, but it's not going to make it safe.
Finally, the American restaurant chain Red Lobster is riding what you might call the Beyoncé bounce. The seafood restaurant was name-checked in one of the more explicit lines of her new politically charged song Formation, which she performed at the Super Bowl this weekend. The chain said that its sales jumped 33% on Sunday from a year earlier. It was also mentioned on Twitter 42,000 times in a single hour, and it trended on social media for the very first time in its history. The power of Beyonce there
I was
for
going
you.
to say, the Beyonce effect makes everything bounce. Fantastic stuff. Kate, thank you very much indeed for that bouncing business.